Hello guys. Um, so this is he's here. This is our weekly weekend recap, where we look into the market for the week and see what happened during the week, and then we'll make some projections as to what is likely to happen going forward into next week, right? So usually we'll start with the economic calendar. So this week we had a bit of some events that had some impact on various currencies. The first was monetary policy rate by the Bank of Japan, which is interest rates, right? So basically the interest rate in Japan right now is in the negative territory. All right, so that means that if you're saving money or investing in federal government treasury bills in Japan, you are literally getting negative yields of minus 0.1%, right? So basically that's what they're doing at this time. So it's been like that for a long time in Japan. Economic policy in Japan has never been, for a very long time, since about 2016, has been very, very loose, as it were, loose. In the financial markets, you have you have tight monetary policy, and you have loose financial policy. So whenever an economy has high interest rates, that is a tight monetary policy. Whenever an economy has low interest rate, that's a loose monetary policy, right? So for a long time, it's been like that in Japan, and they have their reasons for doing that. They want to maintain job growth. They want to maintain certain incomes at certain levels, and a whole lot of other things that makes them keep their interest rate steady the way it is, So that's what we saw on Tuesday. So there's a whole lot of things to talk about the monetary policy situation in Japan, but that's not the purpose of this session. So on Wednesday, we had a lot of PMIs. PMI is Purchasing Managers Index, right? So we had a lot for the Eurozone, we had for GVP economy, we had for US economy too. See, flash manufacturing, flash services. So the economy is divided into services and manufacturing. So these PMIs, basically measures how strong or how weak the manufacturing sector is, or the services sector is, so yeah. And in this week, these events actually did have an effect on the market, had an impact on the market, right? So Bank of Japan also had their monetary policy rate this week, which is their interest rate. They raised interest, they had their interest rate events this week. They did not raise interest rates, right? They left it at the same 5.0%. Right, so this is what they call it, the overnight rate. Overnight rate is the rate at which the central bank mandates banks the rate at which the central bank lends to commercial banks. So commercial banks will now need to mark up this, let's basically put a markup on this 5% to then lend to consumers. So this is the rate set by the central bank, which in this case is the Bank of Canada, right? Yeah, so that caused a rally in the card currency. Sorry, a drop in card in card, in the strength of the card. The strength of the card weakened at that time. So now if you're watching this, you see that USD CAD was a serious buy that day. CAD JPY was a sell. So card weakened because of this news. Okay, also we had we had euro refinance rate. This one had to do with interest rate from the Eurozone, so this had a serious impact on the euro, negative. This impacted negatively on the euro as well, on that day. Okay, so yeah, basically this is what we saw throughout. Then yesterday, Friday, we had core PCE, core PCE index. This is an inflation index, this is an inflation index from the US economy, right? So the forecast was 0.2%. The actual came out as 0.2%. So the dollar started rallying off of this news, started buying off of this news, right? Yeah. So that's what we saw last week. Yeah, well, of course, this week. Now let's take a sneak peek into next week. We'll have time to talk about next week, but let's just take a sneak peek into next week, what we're likely to see in the market next week. So on Monday, we have nothing. Monday, January 29th, we have nothing. See, the month is coming to an end already. On Tuesday, we had Joe's job openings. This measures the number of job openings. You know, this Joe's means job openings and labor turnover survey, right? So this measures the number of jobs open in the US right now, the number of opened positions, you know, compared to the number of people who are unemployed, right? So these are the number of job openings in the US, across the US, that need people to fill them, right? So last month's data was 8.79 million. So the forecast now is that it's going to be at, by the time this data is out next week, Tuesday, it's going to be 8.73 million, right? So Australia, we have CPI data for Australia. We have CPI data for Australia next week also on Wednesday. So that data was 4.3%. That was the number of the annualized, basically the annualized data for inflation for last month. Now this month, the forecast is that it's going to be at 3.7%. So what we've noticed over the past few weeks is that we've been seeing an increase in inflation numbers, a slight increase in inflation numbers again across major countries, I mean, across developed countries, right? So, but this forecast now is more like defying that trend that we've been seeing, you know, where inflation data has been increasing gradually, you know, like 0.2%, 0.2%, 0.1%, 0.3%, like that across the US, across the Eurozone, across the UK and several other places. We've been seeing that slight increase in inflation, you know, but this forecast now sort of defies that. Now we are seeing that there's a forecast that is going to come down from 4.3% last month to 3.7% this month. But of course, that is left to be seen. It's when this data is actually out on Tuesday morning that we will know if this number is right or if it's wrong. And if it is not right, if it's different, how much different? What's the surprise gap between the forecast and the actual? You know, so we're looking for a surprise gap between the forecast and the actual. So that is what will move the market. If that surprise gap is large, you know, then of course we'll see the market really take off on that, or the market will really rally either up or down at that time because of that, right? But if the surprise gap is so small or there is no gap at all, then you will see that the market will just jack up the market a bit, you know, literally you won't see a market direction change at that time, you see. So we'll keep our eye on that. That's an important data on Wednesday morning. Then also across the other countries, then also on Wednesday too, same Wednesday, we have ADP non-farm payroll. Right, so ADP non-farm payroll is a data point that usually it tracks. It's more like a precursor to the NFP. It's a precursor to the non-farm payroll. You know, so the data we watch here usually doesn't have an effect on the market like that, except there is a huge difference between the forecast and the actual. You know, but the way it is now, we have previous 164,000 forecast, 164,000. We'll just wait for the actual. Usually, a lot of traders across the world do not really make decisions based on this particular ADP non-farm payroll. You know, so but it's something we'll just keep an eye on and watch. Then on Tuesday, also on Wednesday, also we have GDP, month-over-month GDP for Canada. So Canada measures their GDP growth, you know, every month. So this is a monthly data. And so usually what you will see here is if there's an increase in GDP, you will see the numbers will increase. If there's a reduction in GDP, you see the numbers will be negative and they'll be red, right? So in this case now, last month was 0.0, which means there was no growth, there was no depreciation, there was no appreciation. This month now there's a forecast of 0.1%. So it means that GDP is going to be rising by 0.1% if the actual comes out equal to 0.1%. So what that means is that there will be a slight growth in the Canadian economy in terms of GDP growth, which means gross domestic product, the amount of goods, services sold and bought in an economy within a period of time. In this case, month by month. Right, so that's good for the Canadian economy if that data comes out positive, right? So if that number increases, if it decreases, then that's not that good, right? It means that there's growth, there's expansion So we talk about expansion if the number is positive, then we talk about contraction if the numbers are negative, right? So that's what we'll keep an eye on with that also. Then for Wednesday too, we have a very important data. This case, we have interest rate data for the US, the economy. So we call that the FOMC funds, federal funds rate. So the federal funds rate last month was 5.5%. So the forecast now is at 5.5% again, meaning that the forecast is that analysts are forecasting right now that there is not going to be an increase or a decrease in interest rates. Right, so that's something we're going to watch that day. And also after that rate release, there's going to be a press conference by the Federal Reserve Chairman. So this press conference sometimes, in this case where the data is the same between this month and last month, the most important thing that we most likely will be watching for is the press conference itself by the Federal Reserve Chairman Jerome Powell, right? So when that data is when he makes that speech, that's when we get a guidance of some sort. It's called guidance, right? The guidance means like what's going to happen going forward. What is the outlook going forward? What are we trying to do now as the Federal Open Market Committee, FOMC? What are we trying to do? Those are the kind of things we're going to be listening to hear from the Federal Reserve Chairman. That will give us an idea where the dollar is going to be going. When he starts making his speech and he has made his speech, you will see that most of the time that usually has a huge impact on the dollar at that time, because he gives some kind of a guidance. Guidance means that he's telling us about what is likely to happen going forward. That's the meaning of guidance. So usually they call it forward guidance, right? So that's the kind of thing we'll be seeing, and that's like what will likely have an effect on the financial markets, right? Yeah, on USD pairs mostly. So also we have GBP. This week is basically full of a whole lot of other events. So GBP also, the UK economy also on Thursday, we have interest rate data for the UK economy as well. They call it the official bank rate. So last month's data was 5.25%. This month also is meant to remain at 5.25%. Right. So, and usually there's going to be I think there's always a conference, a public statement. Okay, BOE monetary policy report, right? So that's what we'll keep an eye on that as well. That's also going to have an impact on the pound, USD, GBP, USD, GBP, JPY, GBP, AUD. Those are the currencies we're going to be watching for on Wednesday for this data. It's going to come out at 1 p.m. We're going to be watching for that. For the US one, it's going to come out on Wednesday by 8 p.m. 8 p.m. And then there will be a press conference by the FOMC chairman, which is Jerome Powell, the Federal Reserve chairman, 30 minutes after that, which is at 8:30. Okay, so what other things do we have? We have unemployment claims, on Thursday, unemployment claims, the number of people who are filing for claims. Insurance, these people are out of jobs, usually temporarily, they're out of jobs, and then they are able to, go to their insurance company and file for claims. So now they say we are unemployed, so I need to be paid. So they usually is more like from unemployment insurance. So when you're working, you put monies into unemployment insurance. If you're now out of a job, whether temporary, you can draw money from there in the meantime before you look for another job. So the number for last week, this week is a weekly data. Number for last week was 214,000. The forecast for this week, of course, the number for this week currently is 214,000. The forecast for next week is 211,000. Okay, yes, we have ISM manufacturing also. Then on Friday, we have FOMC. So FOMC, that's the 2nd of February. FOMC is a huge data point we watch every month. So this is something that we're going to be doing, and then we're going to be trading along during the time this data is released. Last month's data was 216,000. This month is 177,000. So this might be the beginning of a sell in the USD that we've been anticipating for a while. We expected that USD is going to get to a certain level. When we get to the chart now, we'll look at it. This might actually be the beginning of a sell-off in the dollar that we've been expecting to happen for maybe a couple of weeks now. right? So because if this data comes out at 177,000 or less, that is going to trigger a sell in the dollar, in the USD, in the dollar index. Okay, so let's go to the chart now and look at. Now, this is the dollar index. This is the more like the index that tracks the strength of the dollar. Excuse me. So this tracks the strength of the dollar. You know, basically, we watch that to see what is the dollar doing. What is the dollar doing? Yeah, so this tracks the strength of the dollar, right? So now projections we've had for a while is that the dollar is going to rally all the way to these points, right? I remember when the dollar was stuck here, we had this range, you know, market was going up and down, up and down, up and down. We said we expected a breakout. We expected a breakout from this area then, right? Breakout, and it did break out. It broke out, and then this was a pullback, came to test this area, and then it's been buying since then. So what we're looking, when we look at the higher time frame, we see that the dollar is going to likely get to this place around the 104.00 level, and then we expect a significant sell from there. You know, so this is what I was saying just now with the non-farm payroll. And probably because right now, this is what we have. Non-farm payroll is end of next week. Most likely this week, we are going to see price move like this, you know, something like this. We might see price rally like this, like this, like this, like this, all the way to this area. Then, right, then we might now see that price will sell from here. You see, so this is the anticipation that we're seeing. It may be here, price may get to this point, price may still move up to this area here, to this top here. Okay, now the reason why we're looking at that top here is that, can you see? So we can see now that this top here, we have a resistance level here, and this resistance level is what we call a 50% retracement level. So this area now is a 50% retracement level. So when we use the Fibonacci, a tool called Fibonacci, it tells us that the dollar index will most likely rally to this area and then start to sell from there. But sometimes we know that sometimes price may not just stop off at that area. Price may still shoot up a little bit to this top here, which is like a major resistance level here right now. You know, so price may go through this place and get to this point. It depends on what happens with most likely that FOMC. If that FOMC is positive, most likely it might drive the dollar to this area, because the most important news event we're expecting this week, probably not even FOMC, we're expecting this week, we're expecting three main events that are very impactful this week from what we've just seen. Number one is the JOLTS job openings. That has huge impact on the market. Number one is the JOLTS job openings. Number two is the FOMC. Number three is non-farm payroll. These are the three most impactful events that we're expecting to see in this coming week, right? So yeah, now it depends on how they play out. Market may actually hit this zone and sell from there. This is the dollar index. You know, market may hit this point. So market may hit this point and sell from there, or market may still move up to this resistance area, depending on what the data points that we see with JOLTS, with FOMC, and with NFP. Right. So, but my anticipation is I'm expecting price to hit this area and start selling. But then any area between here and here, between 104 and 104.200, that's the area we are expecting price to get to this week, and very likely is going to get there this week because we have some very highly volatile events that's going to happen this week, at least three of them, right? So we should see that happen this week, and from by the end of this week, we should see price start to sell. You know, so if price hits this area before weekend, before Friday, which is NFP, that will probably either through JOLTS report. JOLTS report is on Tuesday, and or FOMC on Wednesday. If price hits this area and starts selling already, usually the FOMC is going to be negative and it will just keep driving price down. Okay, so but we'll keep an eye on this. But this is the area we are expecting. What this means is that once we see price here, it tells us that we should start to prepare to position ourselves in other currencies. Okay, now we know that there's a relationship between the dollar index and some other currencies. And what relationship? Most of it, for gold, for example, the relationship between the dollar index and gold is a negative one. Okay, meaning that if the dollar rallies now, the dollar is rallying, gold will sell. So if we're expecting price to get to this area now on the dollar index, it means that all that while price pushes up from here to this area, gold is likely going to be selling. Gold will be selling, right? But once price hits this point and starts to sell, we should expect a buy on gold. Then we should expect a buy on Euro USD as well. Then we should expect a sell on USD JPY, a sell on USD JPY, and a sell on USD CAD. Oh, this is very interesting because we've talked about some of these things in the previous sessions. So we're going to be looking at very, very, very possible sweet opportunities that will be coming in this new week. Okay. Yeah. And also we might also even be seeing a huge rally in BTC and so on. Okay. So now let's look at so this is for the dollar index, and this is what we anticipate for the dollar index going into this week. Okay. So now let's see what's the outlook on gold. Now we said that if you look at gold, gold has been on a rally, on a downward trend for a while, has been on a downward trend, has been literally selling, and from our previous analysis, we have said that gold is likely going to sell to this area. You can see it still kept selling, kept selling, kept selling, kept selling. Now, if you understand Fibonacci is a tool I use a lot, so I get to talk about it. I tend to talk about it more a few times. Now, if you use your Fibonacci here and put it here, you realize that this is the area where price got to and started to sell. Once price made this move down, it had a pullback. So we said in the past, right, that price does impulse. So price does this kind of thing, this kind of movement that in price does impulse, retracement, continuation. This is what price does. This is how price moves. Now it continues in that cycle, like that, keeps going up like that, right? That's for a sell. Now for a buy, that's for a buy, sorry. For a sell, you see almost the same thing. So you see impulse sell, a retracement, continuation, like that. Continues like that, it keeps coming down. So this is what you see most, this is how the market moves. So the market is moving down. This is how it moves down. So in the sell situation, this area here is the retracement points. These are the retracement points in a sell situation. These are the retracement points, and these are the places where you want to enter the trade for a sell. These are the places where you want to enter the trade for a sell. So once price makes an impulse, you know that price is selling. You're not going to jump in at this bottom. No, you will wait for price to pull back. Once that pullback happens, you get on your sell trade here. This becomes your trade, right? Yeah. So you can exit your trade here and then you take profit. You wait for another pullback, you enter again, just like that. Okay. Let me remove these. Okay, let's remove that. So, okay. So now this impulse here, so we see this impulse. So this impulse happened on gold. This pullback, it made a pullback. So this pullback is where the Fibonacci comes in. The Fibonacci helps you to know how far this pullback is likely going to go. So once that pullback is done, once you see that pullback, it gives you an idea that, okay, good. Now I can see a nice pullback here. It's time for me to get on this trade, right? So yeah, so that's pullback happened here. You can see it came down. It tested that area 3 times before it made a breakout and started coming down. Okay, so let's take this off. Now we move to the next one, because here we are dealing with swing highs and swing lows. So you can see on this one again, let's take out this one. On this one again, now you can see price made another impulse here, made a pullback, and it got to the same 68.61.8 level. You know, the same 61.8 level it got there and is currently selling. So here is what we expect now. Since we can see that on the dollar index, we are expecting the dollar index to still move up to a higher level like we just discussed. So this, we will now expect gold to do something like this, hit this place. That is very likely what we'll be expecting to see. So once gold hits this place, this area, and then we are seeing the dollar index at this point, at this area here, that is our signal. That is literally our signal to buy. That's our signal to buy on gold. So I will be getting ready to make a good buy on gold from here. But if we see a breakout of this area, let's say the dollar index pushes up a bit, especially during the major news we are expecting, and price goes through this place, then this will be my area here. This is actually where I prefer to enter the trade more. This is actually my preference for entering the trade, right? I prefer this area here because I think that this area is stronger, you know, to make gold buy. But then you can't tell, price is likely, we can see a relatively strong support here. So if price comes to this point, this will be a good area for a buy as well. This would be a good area for a buy as well, right? So from here now to around the $2,000 level, this area now is what I will consider a good buy. This is a good buy area. Okay, so that is something we're going to give. We'll be giving the parameters for these trades, not at this time, but we're still going to look at the market by Monday again to see where our entry is going to be. This is likely not going to happen immediately the market opens. So we can still see that on Monday morning. It's possible this could happen before the market opens. Okay, maybe we should set our parameters here and see. So we're expecting a buy. But I am thinking that this is likely to happen on Tuesday because that's when we have a major event, a major news event in the market, right? So that's what I am personally thinking. I'm thinking that that's likely to happen on Tuesday, not even on Monday at all. Okay, so yeah, so we can have a 50 pips stop loss on gold, and we can have that's almost a 200 pip move on to the upside. So this is likely going to be really huge. Okay, this is likely going to be really huge here. So we are seeing a 50 pips movement here, and a 50 pips 50 pips stop loss and a 200 pip profit target on this. So this is a significant move here we are expecting on gold. You know, so this area here around the 2003 will be our entry points. That should be around our entry point. But price can still push down to the 2000 level. That's why our stop loss is below that 2000 level, right? And then if this is happening during when the news is happening, which is those USD news events we talked about Tuesday, Wednesday, Friday, if it's happening on any of those days, I will not enter this trade yet. I will hold on first and let price do its thing around this support area. So I'll hold on first, let price do its thing around this support area. Once price gives us a buy signal from here, we will still have opportunities to enter. So this entry now that I've set here is an early entry, and it's sort of I'll consider it to be a bit risky. So I would prefer that price comes to this point, does whatever it will do here, give us a buy signal, and then over the next few hours after that happens, we will be able to get on a trade. If this happens on Wednesday by FOMC, for example, I don't think so. It may happen on Tuesday. It may happen on Wednesday, but if it happens on Wednesday after FOMC and price hits this area, I will not enter yet. I will hold on. I will wait for price to give me a buy signal. Then by Thursday morning, there will be a good opportunity for a trade. There will be a good opportunity for a trade, right? So that's the way I would play this. But of course, yeah, for those who are interested in jumping in at the time price hits this point, this is how you would do it. But for me, I'll hold on and wait for a buy signal first from around this area before I jump in for a buy. Okay. Then Euro USD also the same thing. Same thing we are seeing. So Euro USD is approaching a major psychological level of the 1.0800 level. 1.0800 level. Now, remember, this is one of those currency pairs that has a very strong negative correlation with the dollar index. Very strong negative correlation with the dollar index, which means that when the dollar index makes a tick up, Euro USD will make a tick down. So now since we expect the dollar index to still buy to a certain level, the 104 level, okay, we expect the Euro USD to come to this area, maybe break this area, hit this 1.08 psychological level. Psychological level means that that's where a whole lot of traders, especially institutional traders, are looking to place trades for a buy. So it will be difficult for price to go through this area, to cross this area, and without even, without the markets, without the market responding or reacting, it's going to be very difficult for that to happen. The only way such a thing happens if we have a news event that is so strong, it pushes the market very hard. Right? And from the news we are seeing this week, the potential we are seeing, well, we're expecting market moving events, but I personally do not think that they're going to be that strong as to really just break through a psychological level like that. Right? Yeah, because we already have an idea of what the news data, what the data points are going to be, and it's in an uncertain economy. Basically, if you're in an uncertain economy where the Federal Reserve, you can just come and increase interest rate or cut interest rates, that's when we can expect those kind of moves to happen. But now we have a bit of some certainty around what's going on in the US. Mainly this week we're expecting US data. We have a bit of certainty about what's going on in the US in terms of interest rates, in terms of inflation and all that. So we do not expect major surprises from the Federal Reserve this week at their FOMC, at JOLTS, and also NFP. We don't expect such huge surprises. So I expect that price most likely will go through this place and then hit this area and then start buying. If you check USD, if you check this move here, you'll see that it's almost around the same kind of movement we are expecting. Around the same from here to this point now is almost around the same kind of movements as from here to here. It's almost like that. It's almost the same thing. You see? So that's what I'll be anticipating. So first of all, as the week opens, I'm expecting the Euro USD to sell. Of course, we'll have an opportunity to enter into that, a trade setup. But currently, I don't think we have a trade setup yet. I don't think we have a trade setup so far yet. I think we are going to be able to get a trade on Monday morning. No trade I can see at this time. At this time, no trade, no setup. Okay, so I think we should be able to get a setup by Monday, but right now there's nothing, no setup at all. So I'm expecting a sell in Euro USD until hits this psychological level of 1.08, 1.08000, and then we should be seeing a resurgence of a bullish move, a bullish resurgence, as it were, there, right? Okay, so this is CAT CHF. Of course, I'm expecting a buy on CAT CHF. So I gave out this trade yesterday. This trade was in good profit initially, then it came down. It has not gotten to a take profit yet. My bias on this trade is actually still running in profit right now, even though it's showing what it is here. This trade is still running in profit. So basically, my bias still remains the same. I'm expecting a buy. I'm expecting price to buy all the way to this area here. This resistance zone of 1.064665. That's my expectation here. So this trade in my mind is still valid. So I have it set up. I have it running. Yeah. So let's look at USD JPY. So USD JPY also right here is buying. Okay. So USD JPY is buying, and USD JPY is approaching a psychological area. Historically, when you look at USD JPY historically, you notice that whenever it got to around the 150 level, price tends to collapse. Price tends to collapse once it gets to that area, right? So for now, if the dollar index gets to that area, we're expecting 104 and starts selling, most likely it will drag the USD JPY down a bit. So I am expecting price to get to this point, this 108 level, 148.88 level, this whole area here, for us to see a sell. I'm expecting the sell to happen from somewhere around there. So yeah. right? So from here now to this point, I'm expecting a buy still. Once price hits there, then I'm expecting it to start selling. But in the meantime, this is this is what I anticipate to happen. I was looking at this just before I came on this session. So I'm expecting price to do this. So I will take this as a very, very, very valid trade. This is the first valid trade I'm seeing here right now. Yeah, so let's look at this. I'm expecting a buy. So yeah, so this is what I'm expecting to happen here. So that's for 80 pips. Yeah. So we have about 25 pips stop loss, 25 pips stop loss, 80 pips take profit. 25 pips stop loss. Let's make this 25 pips stop loss, 80 pips take profit. So this is the target that I have right now for this trade. These are the parameters. These are the parameters of the trade. So you can pause this video and look at them. Look at the parameters of the trade right there. So we have entry price at 147.823. Okay. Let's put it there. So entry price at 147.823. Stop loss is at 147.573, and then take profit is at 148.623. So this is my anticipation for this trade. I think this is a good entry position that we'll be expecting to see by Monday, right? From Monday morning, we should be expecting to see this. Okay. Then USD CHF. USD CHF is also very interesting because right now USD CHF also is hitting a point where I'm expecting a buy. I'm expecting overall, I'm expecting USD CHF to sell. I'm expecting USD CHF to sell significantly, but before that happens, it's going to buy. Okay, it's going to buy because the dollar index is still buying. So the dollar index is still buying. I expect Euro CHF to sell. So very likely it might get to this point. It might get to this point here. This area here is where I'm expecting to get to. It might get there. It might get here. Okay, it might get here or it might get there. Okay, so currently where Euro CHF is now, where Euro CHF is a good point for a buy. So this is where I'll take this trade. That's for 50, 51 pips or so. Then stop loss will be below this area, below this low. Okay, so below this low is somewhere around 13 pips. Below this low is somewhere around 13 pips or so. This is the target on this trade I will be taking. Okay. So this USD CHF, I'm expecting to have a 13 pips take profit, stop loss, and 52 pips take profit. 52 pips take profit. So the entry price is 0.82 86278. That's the entry. Then stop loss is 0.86143. Then take profit is 0.86801. So you can't set this trade right now because the market is closed. So this is something you can do once immediately the market opens, right? So that's the entry on this pair, USD CHF. So most likely USD CHF is going to be an instant execution buy when the market opens. Instant execution buy, which means you enter immediately for a buy and set your stop loss there. Okay. Then what do we have on BTC? Okay. So BTC's made a sales, has been selling off since since the ETF approval. And the reason why we had BTC selling off like that was because people began to take profit. BTC hit 49,000, and then people have been taking profit from BTC all that while. Okay, so now it looks as if it's about buying again. It looks as if it's about buying again. So this is the area where we're going to be targeting to see a buy. A buy. Now BTC works throughout the weekend, so this is something that we can actually enter this during the weekend. Okay, so here is what I expect to see in BTC. Is what I expect to see in BTC, at least for the first move. For the first move here, I'm expecting to see this. So let's see. Let me see. Very likely price is going to get to this point. Okay. So this is this is what I'll be looking for in BTC. Okay, this is what I'll be looking for in BTC. So the entry price here will be at 40,000. This is a buy trade on BTC. The entry price will be at 40,397.46. So that's a buy trade, a buy limit trade, So this is a buy limit trade from a buy limit trade from BTC, right? Buy limit trade. So stop loss is at 39,262.8, 268, 39,268.19. Then take profit 42,909, right? That's our take profit. So that's a good move I see on BTC there. So that's likely going to be what's going to play out there. So once BTC goes through this area, buys and breaks out of this area, then we should see price going back again to the 49,000 that we saw before, the 49,000 that we saw before and beyond. Okay, so this is the way I will play out. I'll play on this BTC as it goes out. So this is a buy limit. I'm expecting price to take off from this area here. I'm expecting price to take off from here and then buy to that area. Okay, so yeah, I think. Okay, so this is a trade I analyzed the other day. This Euro CHF. This trade has been very, very nice. Look at how we analyzed this trade going up before. Going upwards, the pair is such a nice trending pair that I love it so much. We analyze this, look at it, we analyze this, and then the thing just kept buying and never looked back until he take profit. Now we analyzed it again from there. In fact, I could see this from a higher time frame analysis. That price is coming all the way back down, and it's been really doing that so far. So this is we're going to have an opportunity for an entry in this market again on Monday, but right now it's not. Let's see. Okay, this might actually be a good one. So very likely we'll see price get to this point here. Okay, so I'm seeing price push up to this point. I'm seeing price pushing up here, and then selling to this point here. So yeah, that's what I'm saying there. I think that's going to be a good sell, at least to this point here. It's likely coming all the way down. But for now, I think having it stop at this point here is a good one. This is Euro CHF, and I think Euro CHF is a very, very sweet pair to trade. So we have a 25 pips stop loss there, 25 pips stop loss, and take profit of 69 pips. Pretty good. Okay, so these are the entry points. This is going to be a sell limit on Euro CHF. A sell limit on Euro CHF. This is going to be a sell limit on Euro CHF. The entry price is going to be at 0.93944. Then take profit 0.93250. Stop loss 0.94198. So now this trade I will still hold on for now, because usually Euro CHF and USD CHF goes in the same direction. So since I'm expecting Euro CHF to buy, as the week opens, that means Euro CHF may still buy a bit. It might buy into this zone, but I think it's going to be fine. This trade is actually fine with the stop loss and take profit and all that. I think it's going to most likely buy all the way to this point, this same area here, and then before it starts to sell. So this buy will equal to the buy that we're going to be seeing on Euro CHF. You see? So then before we get on the main sell. And then also, what we said before, Euro CHF is really preparing. USD CHF, sorry, USD CHF is preparing for a significant sell. When you look at it from a higher time frame, it's preparing for a significant sell, right? So, but we need it to, the dollar index, the movement on the dollar index is what has been disturbing it, literally, right? But once the dollar index starts to sell, you will see Euro CHF is going to sell. It's going to be a massive sell, right? So it's going to commence, it should commence somewhere around here. somewhere around here, most likely this resistance zone or this area here on this top, but Euro CHF is going to start to sell once the dollar index starts to sell really big. You know, from the news event we have this week, that's the anticipation. That's what we're expecting to see happen. Okay. Do we have anything else? Okay, we'll stop the class here, and so those are the trades we've looked at now. We've looked at Euro USD, gold, dollar index, CAD JPY, USD JPY, USD CHF, BTC, Euro CHF, right? So yeah, so thank you guys for coming. I'll see you guys on Monday again while we go through. So those trades, when you look at it, watch the video, please take a stop and take a take those trades, take the parameters on those trades, and you can set them. Okay, thank you.
Thank you, Mr. Ace.
Yes, thank you.
Good morning.
Good morning.